Hey everyone, this is Norm Farrar, aka the Beard Guy here, and welcome to another Lunch with Norm, the Amazon FBA and e-commerce podcast.
Lunch with Norm. Lunch with Norm. Lunch with Norm. Lunch with Norm.
Okay, so today we have a first-time guest, Michal Oron, and she is from. She's going to be talking about Amazon exits in 2021, and we're going to be talking about the do's and the don'ts and everything in between. Why you should be using a broker or a consultant, what you need to know. So if you have anybody that's in Amazon or in e-commerce that's looking at exiting later on, or not quite sure what to do, this is the episode to listen to. So we've talked about this in the past episodes, but it's always great to get new information, and Michal's the right person for that. So before we get on any further, where is my sidekick?
Here I am.
Hi, sidekick.
Hello. Hi. They call me Robin over here.
I call something else.
All right. So how are you doing? How was your weekend?
I had a good weekend. 2 weeks or 2 days of sunshine. My gosh, I can't believe it.
Beautiful over here in Toronto, Canada. But Beer Nation, where are you watching us from today? We'd love to know. Put them in the comment sections. Also, if you're watching now, you can smash those like buttons, and we'd really appreciate it. We also got some two great prizes today. One from Michal and one from us. So stick around for that, and I think you guys will really enjoy that as well. All of our highlights and daily episodes are up, or highlights and full episodes are up on our YouTube channel. That's the Norman Farrar YouTube channel. Put the links in the description for everyone as well. Welcome, Dr. Cause. We've got from Los Angeles, still smiling. Okay, Rad, Simon. Welcome, Tony and Andrew.
Okay, right. And Simon's already taken advantage of the wheel of Kelsey. Okay, we love Kelsey. All right. Today's Monday. Well, live. It's Monday. And if you'd like to go over to our Lunch with Norm site or Norm Farrar site, we do have the newsletter that doesn't suck. It's a really great newsletter that provides all sorts of content, not only from the podcast, past guests, but also from around the internet's a bunch of curated content that is really relevant for online sellers, not just Amazon, but online sellers. The other thing I just wanted to touch on, we don't talk a lot about this, but I've had people ask me in the group and around. I've got 2 messages today about one-on-one consulting. I try to keep away from one-on-one. We do have an Amazon managed services company. I don't talk about it a lot, but I do have with Tim Jordan, the Centurion League. And that is like if you wanted to go one step further in your Amazon or e-com journey, that is something to take a look at. Tim and I have joined forces about, I don't know, it's probably been 4 or 5 months. And anyways, everything's kind of coming together. We've got the group together. You can go over to privatelabellegion.com/mastermind, I think, if you want to check that out. And we meet 8 times a week and about 2 hours each time. We've got a really great engaged audience over there as well. So anyways, let's get on with the show, Kels.
Let's do it.
All right. So sit back, relax, grab that cup of coffee, and enjoy the show. Hello, Michal.
Hi, Norm.
How are you?
I'm fine. How are you?
I'm doing okay so far.
Good to see you and to take a part in a family gathering in the Norm, in the Farrar.
Yeah, well, it's great to have you. And for those of us that don't know you, can you just give us a little bit who you are and what you do?
Sure. So my name is Michal Oron. I'm the CEO and co-founder of Fortinet. Fortinet is an investment banking firm that is a boutique that specializes on e-commerce and Amazon businesses mainly. We are focused on representing the sales side, so business owners, Amazon sellers who are looking to sell their businesses. We are representing them in the process. We are a team of more than 20 people that includes M&A and mergers and acquisition experts, financial people, legal team, and Amazon experts. And with that, we are wrapping the Amazon seller with all they need when they are looking to sell their business. So that's in short about me. Maybe a few personal. So my personal background: I'm a lawyer I used to be a lawyer for 25 years before Fortunate was established. I dealt a lot in mergers and acquisition. I was a VP business development of a large international company. So dealt a lot in those kind of deals around the world. That's it.
Perfect. Well, before we get into everything, I really can't express or recommend enough that if you do have friends or family that are involved with Amazon, to either tag them or get them over to the podcast to listen to this. I think we're going to have some really great info for people. You don't know where it's going to end up. Some people, they start Amazon to get us a bit of spare cash. And I know two guys that did this. They got together and they started just, selling pillows. And now this pillow company has exploded into this huge multi-8-figure business. And, they never planned on having an exit strategy. So this is what's going to be interesting about today's conversation. We're going to talk about the do's, the don'ts, everything in between, why hire and don't go direct. Oh my gosh, don't go direct. We've talked about this on this podcast before, but it's the greatest way to lose money. All right. So where do we even start? I think, probably the best thing, let's talk about selling your business. When should people start thinking about that?
So that's a great question. I mean, one of the toughest one, I think. First of all, it's very much personal and it relates to everyone's own aspirations in life, where one sees himself in the next few years. How does he feel about his prospects to keep on growing the business? And other consideration, which are mainly personal. I can share what we see in many cases, what we hear from different Amazon sellers. Sure. We hear them considering selling their business once they feel that they are close to hitting a kind of a ceiling, a glass ceiling, that they will not be able to penetrate further. Some of them didn't create a sufficient broad organization around the business that can help grow it endlessly. Others feel that they see a lot of money in turning around in the business, but they are unable to actually take money or significant amount of money back home. So selling the business is a very nice way to meet the value that you've created. So this is in general. When to sell the business is a great question, but I can tell you that once someone decides that he does want to sell the business, okay, for whatever reason it will be, then it is crucial to consider what is exactly the right time to do that. And here, I think that in each business, you should balance between the business odds under your current, the business prospects to keep on growing under your current performance or your current management against the risk that you are facing. And in all of that, you should also calculate your energy and personal wish to keep on dealing with the business on a day-to-day basis. So usually it is important to sell the business when it is still growing. You should not sell a business which does not grow, because then it will be much less successful sale. And other than that, it's all about considering the specific circumstances of your business.
So what are buyers looking for in growth rate?
In growth rate, so usually buyers are looking to see a business grows between, I don't know, at least 20% per year, and the more the merrier, of course. It doesn't mean that buyers cannot recognize a growth potential in businesses which do not grow as well. Or that buyers may be skeptic about the ability to keep on growing a business that has shown a large growth before. So it doesn't mean that whatever was the growth rate would continue to be into the future. But usually buyers are looking for a business that can grow hopefully a lot. This industry is not yet in a stage of a cash cow, so they are not. So no one is looking to just buy a business and keep on managing it as is.
I've been getting emails on different brands or 4 different brands. So we have a 3PL and we also have it where people can forward their mail over. Anyways, we have seen this surge of sight unseen offers. So, oh, hey, we've already taken a look at your brand. We'll offer $100,000 or $150,000. What do you think about those? The first thing I see, like if I present that over to my client, they'll get all excited for $100,000. The brand is selling way more than that. It's got huge potential, but it's the first, oh my gosh, this brand is actually worth something. What do you think about, jumping on those types of deals right off the bat?
Yeah, I think that this is it's a dangerous situation for a seller. Okay, and we're meeting many like those. So first of all, it's very flattering to just one day out of the window, such a flattering offer is coming your way, but everyone should be very cautious about it, because the danger here is that not how much money you're about to get, but how much money you're about to lose. A business has a value, and the business owner has only one time to sell his business. So if you sell your business below its value, it means that you're losing money. It means that you gave away for free part of the value that you created with your hard and good work for many years. And maybe to elaborate a bit more about it, I will start with one example, and then I will explain why it is so important not to just sell the business this way. So maybe just one example, which is quite recent. This is of a nice client who approached us when she had already an offer from a buyer, which she actually considered to take. And eventually, we doubled the price. And we're talking here about a deal in million worth. Okay, so this is about to be a deal of around $8 million instead of $4 million.
Wow.
Which is a huge difference. Now, why this can happen? Why something like this even can happen? So first of all, I think that many Amazon sellers do not know exactly what is their SDE. The SDE, seller discretionary earning, this is the profit that the business generates. The profit for the purpose of calculating the valuation. This profit should be very carefully calculated by the seller himself or by someone on the seller's behalf. In no way a seller should let the buyer calculate this profit for him, because the way you calculate the SDE is the start of your negotiation over the price of the business. So what is this SDE? This is the revenue minus all expenses related to Amazon and to other platforms if you sell on Shopify, minus the cost of goods sold, which is the money that you pay to your suppliers, and the delivery and shipping costs, and warehouse cost if you use a third-party warehouse. and then some other costs. And there are costs that can be adjusted, so can be added back. This means that these are costs that you do have for your business, but will not be taken into account once the SDE is being calculated. So this is the first thing which is very important. First of all, you must know what is your SDE, and then you must have a kind of sophisticated SDE that shows or demonstrate the highest profit that you can reasonably claim for your business. So this is one thing. Bless you.
Thank you. I hope I had it on mute.
Yeah, it was nice. I hope that I will be able to do the same. See that I will be quick enough. The next thing is that you must be familiar with recent market multiples, because the value of the business is being decided based upon multiplying the SDE by a certain number. And this number, this multiple, is something which is changing very dynamically these days, and you cannot rely upon anything that you've heard about. Because of the market dynamic. So this is the second thing. A third thing which is very important is to create some competition over your business. It's not that all buyers will offer you the same price for your business. There will always be one buyer that will be willing to pay the most for a certain business because of this buyer's specific interests and needs. So one is more interested in business in the beauty category, and another one is really of a need to buy a business with at least a profit of $5 million a year, and so on. And one just lost a deal in other case, and now it is really important for them to prove that this time they can close the deal very quickly, or different considerations that apply to the buyers that you cannot anticipate. And the only way to know in a specific moment how much is the maximum price that you can get of your business, the only way to know that is to conduct, first of all, a diligent process that includes all potential buyers for your business and a competition between them. Because once they compete one against the other, you get to the best price. There is another aspect to it, and this is the deal structure. So it's not only about the multiple, but also how the deal is structured. So for example, we had a case where a guy came to us and told us that he got a great offer, a direct offer from some buyer offering him to buy the business for 6 times the SDE. So we told him, that sounds really good. What are the payment terms? And it turned out that the payment terms were upfront payment of 2 times the SDE, and the rest of the payment is subject to so many conditions and terms that who knows if ever this will happen. So this is also very important to structure the deal right. For all these reasons, it is just a dangerous situation to just sell your business direct to a buyer. And maybe one last thing that I want to say about that is that sometimes there are sellers that are being approached by more than one buyer. So they are being approached by 1, 2, 3, 4 buyers. If you are being approached by 4 buyers, that means that potentially you are able to get 40 offers for your business. So not only 4, but 40s. And obviously, when you can compare as many as offers that you can compare, you can get to the best result. And
sometimes the best offers are not the best ones to take. If you read the fine print, and like you were talking about, where there's either a consultation or if there's all these milestones that a business has to meet, and some of those milestones are made to fail. There's some really terrible deals that have been put together, but there's also some awesome deals. And I don't know if you would agree with this, but probably most of the deals that are on the market would probably have some sort of either performance clause or a buyout after a year or 2 years or 3 years. They would have a final payment, but it wouldn't be like it would be a smaller portion, 10% or 20% or something like that. Is that what you're seeing?
So yes, generally we do see that some part of the deal is subject to future payments, different kind of payments. I can elaborate a second bit about that. There are, in rare occasions, we were able to have 100% cash upfront deal.
Oh, that'd be nice.
So when it is really important to the seller and the business is really good, and you find the right buyer, so this is something that you can aspire to get if this is really important for you. But in many other cases, it's okay to accept the notion that some of the payments will be payable over time. But here the idea is to structure those payments in a manner that increase the chances that you will actually get them. So, for example, I can give a few examples. So there is some kind of a future payment which is called stabilization payment, a payment which is made if the business shows stability in the 12 months compared to the 12 months prior to the closing of the deal. And then the question, what is this stability? And we were able here to negotiate different kind of stability of what would deem to be a stability of the business. So one thing can be a 100% hit of the exact same SDE that you had before. So here, for example, it is a problem because the buyer controls the expenses. So you must limit the amount of expenses that the buyer can expand over the business in those, at least for the purpose of calculating the the profit. But what happens if there is a miss by $1? You missed it is almost stable, but just $1 less. Doesn't mean that you get it's all or nothing. You didn't hit the business didn't hit the exact figure of profit, and then you are not entitled to any of it. So usually we will try to negotiate and have a buffer. So if the business hits 90% of the previous, for example, profit, or maybe you should measure the stability over the revenue and not the profit. So here it depends, and each business must make his own calculation on what is more certain for in his case. And if we're talking about stability payment, this is how it should be calculated. Then there are different performance-based payments. So, for example, it is quite common to see offers that suggest a profit share above a certain threshold. So you take the profit that the business had before the sale. This is like the baseline. Whatever profit comes above this baseline is being splitted somehow, some pro rata between the buyer and the seller. So here again, sometimes you can negotiate and have a profit share which start lower. So if you had, let's say, a profit of $1 million before the sale, you can start and split a profit which comes above $700,000, for example. So this way, at least part of the profit is more certain. Or, for example, we had a few deals by now that we were able to actually create a kind of, let's say, shadow retention of equity. So that means that if the buyer would want 15% of the price to be paid in the future, okay? Just pay 85% of the purchase price upfront. So we were able to agree with different buyers that 15% will be considered as if the 15% of the business is being retained by the seller. So it is not actually being retained, it is just economically considered to be the case. And in such case, after 1 year and then 2 years, it depends on the exact structure, the buyer would pay an agreed upon multiple over the future SDE. So for example, if the business had $2 million SDE before the sale, and then after the sale, then let's say that the multiple is 5, okay, and then a year after the sale, the profit is lower. It's not 2 million. It's just 1.5, which is a disaster, of course, because no one is looking to see this situation. But let's say that this happens, then the seller in such case would get 5 times double 1.5, and then 15% out of it. So that means that the seller would not end up with getting nothing for the 15%. It just depends how much he will get, but not if he will get any payment. So there are different deal structures out there that each seller should look for in order to make those deferred payments more certain.
Okay, now before we get to the next question, just wanted to remind people, for Wheel of Kelsey, but we have to know what the giveaway is today. So Michal, what is the giveaway today?
So thank you for offering us to do that, and we were happy to collaborate with you on that. So for it is Kelsey Wheel, right?
A Wheel of Kelsey.
Wheel of Kelsey. Okay. So the winner will get a consultation from us about the right timing to sell the business. This is an initial consultation which we will base on our analysis of the business, of the specific business, and then we will be able, together with the seller, to consider what is the right time to sell this business.
All right, very good. And to enter that, it's hashtag Wheel of Kelsey. If you'd like to get a second entry, just tag 2 people and Kelsey will enter you a second time. Plus, today, we've got our mugs that have just arrived. We just got a bunch of mugs that came in, so we're going to be sending out one lucky winner a mug. So just, if you want a mug, that'll be the second prize.
Yes, and to enter into that mug contest, so there are a couple stipulations. Just you have to have a U.S. or Canada address. Oh yeah. Just for us to ship. And the hashtag will be hashtag mug, just nice and simple. Hashtag mug for the mug, and Wheel of Kelsey for the consultation. Okay. And
all right.
That's it for me.
Oh, and don't forget, got to stick this in here somewhere. Smash those likes, subscribe, do all the stuff that my son always says, but he hasn't said yet today. But ring a bell, do those things, and we really appreciate it. Okay, now, what are the other things?
Can I win a mug as well?
Yeah. One of the things that I like to talk about is the prep earlier. Like, we've been contacted by aggregators, and we've been contacted by M&A companies to help out, just make an analysis on, okay, look at this company could get to here. Right. So we'll take a look, or, whoever will take a look and just say, look, you've got horrible images. You've got horrible this. You've got horrible this. If you do this, you can improve. And then over a period of a year that it might go from $100,000 in sales to $250,000 in sales. We could also, and I'm not just saying me, but anybody who's what I would say an optimization person, is probably worth just getting them in there to take a look. A lot of the times the M&A company will have somebody take a look at your account, but there's a lot of what I call steals on the market, where people don't know what they have. All they know is they're a failing Amazon seller, and they're just trying to get out. I bought a brand this way a little while ago, where phenomenal brand, but the guy just didn't have the capital. He was having sales, but he didn't know what he had. And I tried to tell him, but he just didn't listen. But anyway, if you have you remember how hard it is to get a really successful listing up and going, and just doing a few little tweaks really get the sales to start to move, the momentum going. That's the same thing when you're trying to sell your company. If you do the small things right, if you eliminate those expenses that you don't need, if you make it tight, if you get the SOPs in place, if you get your simple accounting properly, go to a company that knows e-commerce accounting or Amazon accounting, These are the things that don't necessarily make your multiples go up, but the ease of transition is there. And I think that's important. Thank you. More coffee. But these are the things that I think are very important when anybody's looking at trying to sell the business, or even if you're not thinking about trying to sell the business, get these in place, because at one day you don't know where you're going to go. If you're not thinking that your brand's going to go anywhere, that's fine. But anybody who wants to move or get a multiple or get the maximum or optimum multiple should probably talk to an expert first. And we're going to talk about that in a second, but an expert first who will give pretty much free advice, because they want you to succeed so they'll succeed later on. And it's this free advice goes so far. We're not talking about, like you just said, a 2 million to 4 million or a 4 million to 8 million. There's a huge difference in what you can do. So I guess that being said, I'm long-winded, but why should companies, other than what I just said, go to a consultant or to, a broker rather than trying to cut a deal directly?
Yeah. So actually, first of all, I agree that it is very important to look at the business with open eyes and understand what is the potential is there, and to make sure that you don't leave too much money on the table when you hand over the business to the buyer. For example, we had 2 examples of businesses that we have accompanied for a year. One of them started with a profit of $1 million, and when we sold the business, it had a profit of $5 million a year later. So 5 times, it grew by 5 times. And the other business had a profit of $2.5 million, and the profit grew also to $5 million. And both of these businesses were sold in the last quarter. Of course, the difference between is huge, okay? So this became deals of about $20 million instead of deals of a few $1 million. Of course, the difference is obvious. Any dollar that you add to your profit, no matter how, either by the growth of the business or by saving cost or by preparing your financials in the right way, may equal eventually to $5 or $6 or $7, depends on the multiple that you get. So each $1 in the profit during the sale is this dollar multiplied by the multiple of your business, which can get to a lot of money. And we have many examples like that. We like a lot those businesses who come to work with us, for example, way before they actually want to sell the business. So we accompany them for half a year, for 6 months, for 12 months before the sale of the business. This way we can share good practices. It starts with preparing the financials. As I mentioned, it appears that many Amazon businesses, although they use Seller Board and Seller Legend and those different software, which are all very good, the QuickBooks, they don't calculate the profit as a profit should be calculated for the purpose of the sale of the business. So it is very helpful to do this in advance and to understand exactly how your operation is being translated into a profit, which will then be taken into account in order to evaluate your business. So we start with that, just to reflect the seller, what his business represent as a profit today. And from there, we take it further. We analyze the keywords and PPC and pricing and the different products and variations. And sometimes we take a look over IP. We make sure that sellers are consulting with tax advisors and being prepared on the tax aspect before the sale, which is, of course, also very important. So all of these to be taken care of prior to the sale by a professional who used to do it and has the experience in doing that and in making sure that those processes will actually be applied as required. This is highly important. So this is one reason why one should take an advisor, okay, that should lead him before the sale. And then the next thing is to consider when really it is the right time to sell. So we would prepare some kind of projection to understand what is expected for the business going forward, and then with the balance of how the business can still show growth on one hand, but on the other hand, not too high of a growth will be left to the buyer without the seller enjoying and benefiting the fruits that he actually created. With balancing those two things, we can decide together with the seller on the right timing to sell the business, which is also very important. And then the next thing is the process itself. And here again, I will reiterate it very shortly, but preparing a smart P&L, a smart financial report that calculates the SDE in an intelligent manner, but which makes it as highest as possible. This is very important, again, because if your SDE, we had a case where we were able to add $250,000 to the SDE just by adjusting and adding back several expenses. So $250,000 doubled by more than 4 times, make the calculation. This is more than $1 million just by preparing your P&L in the right manner. This is crucial. We can get into more details if you like and discuss what kind of adjustments can be made to the SDE.
Yeah, I think that would be interesting. Even events. A lot of us go to a lot of events. Can that be added back?
Of course, this will be added back. This is, I would say that this is maybe an easy one, okay? The tougher ones would be air shipment. So can you adjust the SD and actually eliminate the air shipment? So this will be a question dependent on how and in what circumstances you actually use the air shipment instead of sea delivery. So this is one example. Another example is a case where cost of goods actually declined in the past 2 months. How should you treat it? Should you apply the higher cost to 10 months and then the lower cost to 2 months, or create kind of a pro forma calculation of your profit? How would your profit look like if the declining cost had occurred at the beginning of the year? Okay, so we would take the lower cost and apply them to all of the year. And then employees. Of course, the seller own salary should not be taken into account, but other employees. So we would do an analysis of the exact occupation of each and any employee to determine whether all of their work is related actually to the management of the business. Because it happens that in some cases you can find their personal assistants, which take care of your personal staff, or people that actually are building your next brand and not this current brand, or people that are engaged with developing new products which are no longer relevant. So we may be able to claim that part of the employee's cost should not be taken care of and actually should be disregarded. So there are different examples like that, which makes a huge difference. Okay, for another example, inventory shortage, loss of sales as a result of inventory shortage. So in some occasions, we were able to calculate exactly how much sales were lost as a result of the inventory shortage, and we were able to add it to the calculation of the profit. Or there was a case quite extreme, I think, of a guy who lost almost $1 million in one day as a result of some campaign which was not which enacted with some technical problem and actually caused him a loss So he sold the products for loss. He lost money on each product that he sold. So we were able to show that this was the result of a mistake, and we just ignored that. And instead of the $1 million loss, we actually calculated how much money he should have earned during this day out of the sales of those products. So each business with its specific circumstances, those things should be carefully looked at. And after we talked the SDE, maybe it's also very important, and this is another reason why a consultant should be in place, is the storytelling. So each business actually has its own story. What is the story? The story is what are the business pillars that make the business sustainable and built for long-term growth. If this is the case, and if this is not the case, so what are the pitfalls that can be easily improved? And these are a great opportunities to grow the business by just fixing those matters. Or what can be done better? What are the activities that can be taken as part of the business development? For example, entering additional marketplaces, or launching new variation of the certain product. All of these should be part of the storytelling of the business. No one else would tell your story the way you can, and you will be able to do it better with a consultant who has the experience to do that for you. The importance of it is when you are approaching a buyer, or hopefully buyers and not one buyer, the importance of it lies with two aspects. One is to really point out to the buyer what are the business strengths and why this business is built for growth and why it's worth more money. Sometimes it is an eye-opener for the buyers themselves. Another reason why it is so important is just for the negotiation dynamics, because if the buyer understands that you know what your business is really worth, he will not play with your games, okay? If a buyer recognizes that the seller doesn't really understand what is the real value that lies in this business, then the negotiation starts from not as a good point for the seller. So this is also very important. We invest a lot in preparing those business stories.
Right. Yeah, it's so important. It's your brand story too. I mean, it's everything about the business. Yeah. So let's talk about how the market has changed over the last 6 to 8 months. What have you seen?
Yeah, so we're seeing more and more buyers coming into the play. I think that there is now, just among the aggregators, more than $4 billion with the one purpose to buy Amazon businesses with this amount of money. So this is one thing, and as a result, of course, the multiples are going up, and the market is very dynamic. The level of competition between the buyers is really high, and actually, under these market conditions, it is crucial for a seller when he sells the business to conduct a kind of an auction between those different buyers. So you should recognize who are the relevant buyers for you, and you must make an auction between all of them in order for them to bid and to submit their offer, and maybe then to improve their offer and to submit another offer and another offer. And we saw buyers submitting 5 offers just for one business. Each offer beats the previous one when they really want a business. And this can be achieved only by an auction. This is a part of the recent market dynamic, I would say. We see also other buyers, not just the aggregators. So there are strategic investors. There are Amazon sellers, larger Amazon sellers that decide to expand their businesses not only by an organic development of the business, but also through acquisitions. So these are also potential acquirers for businesses, and they are also private equities and venture capitals that are looking to buy those businesses. So the amount of buyers out there is greater than ever, and the multiples are growing dynamically and intensively. I think that this is the main thing that we see in the market today. With that, we see also that the market becomes a bit more mature. So we can see that more traditional, I would say, merger and acquisition structures, deal structures are being implemented. More tendency from the buyers to offer some guarantees, some surety for future payments. So the market becomes a bit more normal and create better terms for the sellers. And of course, I can say that this is something that we feel in the past year, but also in the last 6 months. I'm sorry. What we feel is that each month equals few months or a year. The pace of changes in the market is enormous. It's hard to imagine even. So each week we feel something a bit different, and each month when we look back at the previous months, we see that the market is not exactly where it was before. That means for the seller that they must do a diligent work before they sell their business. Whatever was the case 1 month, 2 months ago may not be relevant today. And that means that one may lose a lot of money if this extensive and diligent work is not being done for the seller.
I like to add, especially if the seller hasn't prepared properly and something slips through the cracks during due diligence, that could mess things up too. So all of a sudden the buyer realizes that he didn't get what he paid for or what he's offering. I've seen deals change on a dime when the homework hasn't been done properly by the seller.
I agree. I think that this is also, so being very well prepared in advance is very important. The buyer legitimate interest is to conduct a thorough due diligence over the business. No question about that. So seller must be cooperative and allow the buyer to get any information needed about the business. But what the seller doesn't want to happen is that the buyer would find new things that will surprise also the seller.
Right.
So you should be surprised about your business by the buyer. You should make the homework before. You should know before what are your soft parts, what are the soft parts of the business, what is not as glamorous and successful as other things, and you should have the right answer to those difficulties or challenges in advance. It's not only 100% amazing businesses with 100% successful part of the business can be sold. Also, businesses with some difficulties, some challenges can be sold, but the best way is to be prepared to that. So for it, I can give you maybe one of the most extreme examples that we met around that, and this is of a business that by the time we prepared him for sale, this is a business that had few Amazon accounts. Actually, the different brands under the same category in different Amazon accounts, and all the Amazon accounts had a significant part of the business. So no one of them was just marginal, and one of the accounts was shut down by Amazon. By the time the account itself, not the listing, the account was just shut down because of some claim about review manipulation. So, and the account was shut down for 1.5 months, but during the time that we prepared the business for sale. So we continue to prepare the business. We continue to calculate each and every part of, profitability by product, by market, whatever needed. And we just waited until, and we also analyzed what is the reason for this account to be shut down. And we understood that it will be reinstated. We didn't know exactly how long it will take, but it was sure that this will happen. And actually, we understood that by the time that it was reinstated, that actually it was a kind of a clearance obtained by Amazon, that those suspected reviews as manipulated were okay, because after Amazon had reviewed the case, it decided to reinstate the account. So this is the way we presented the business to the buyer. That's right, you have an account that was shut down, that's an issue, but what is the advantage of it? That you kind of have a clearance over the performance of this account around those matters. So it is very important to learn everything in advance, not to be surprised. Yeah.
I was going to say, do you have a checklist or anything that you could provide where people can just take a look at it, and if it either is SDE or if it's anything to help sell a business? Do you have any information that you might be able to provide?
So I can share now. Of course, we can do more than that, but I can share now in general what are the main points. Okay.
Yep.
So first, as I mentioned, there is the P&L. Okay, the P&L and the SDE calculation, no question about that. Then there is the IP. A seller must understand if there are any IP issues with the business on one end, and on the other end, to make sure that if we're talking about a private label business, that the trademark is registered and you have a brand registry and there are no issues with that. This is very important. No breach of a design patent, no warning letter that you have received. And if you have, you should get advice. What should you do about it? Don't just ignore it and think that since nothing happened and you keep on managing your business, this is no importance at all, because it is important. It's a risk. So this is another thing. The next thing maybe is the account health. So we are trying to understand with the seller if there are no black hat tactics applied to the account. It doesn't mean that the seller must be a saint. Not only saints can sell their accounts or businesses, but if really black hat tactics have been in place, it means that this business is at high risk. Business at high risk worth less. So this is something that we must understand. Okay, so one would actually review his tactics and what he does and doesn't. Okay, and usually you should aspire to meet the terms of sales, and if there are of Amazon, and if there are any major gaps, you should consult how you can close those gaps. So this about that. Another thing is tax considerations. This is a crucial matter. A seller must consult with his tax advisor before selling the business. This should be part of the process. Sometimes it impacts the timing of the sale. Sometimes it impacts the deal structure. These are things that should be known in advance. And then just optimization. So many sellers, there is a typical question: what can I do to improve my business really quickly before I sell it? Our usual advice would be: don't do anything that you didn't do so far. Don't just change your overall operation now. This is not the right time. If you're going to sell your business in the short term, if you have a time, if you have 1 year, maybe you can change things. But if, for example, this is a seller that doesn't launch products on an ongoing basis, this is not the time to start launching new products. If you didn't sell on Amazon UK and you think that this is a good idea, but you want to sell the business now, don't start to sell on Amazon UK just now. Leave it to the buyer to do that. These are, in general, these are the main things that we would look at. And of course, an analysis of the business, which includes PPC optimization and comparison to competitors, pricing optimization, inventory should be managed very well. This is also very important. There are different factors. Okay, but when you look at the different factors that actually impact the value of the business, but you cannot really change the fundamentals of your business in one day. So just to understand what you have in your hand, these are the main things.
Oh, you caught me mid-cough.
You should use tea with lemon instead of.
I think so. I think that's what I have. Tea with Norm. That'll be the new podcast.
Exactly.
Okay, so just before we get into the questions, you are providing a consultation, and to take advantage of this consultation is incredible, because what you can do is you can siphon out what you need to improve your listing to make it optimal for sale. And you got to take advantage of this. And so if you're interested in this really generous offer from Michal, hashtag lunch with, or hashtag Wheel of Kelsey, tag 2 people and you'll be entered twice. Okay. And if you would like one of the mugs that we just got in, it's just a hashtag mug, I think, or something like that. But please, if you have any questions, throw them into the comments section. We're going to be getting to them right now. Okay. So Kelsey.
All right. So we have a couple questions here.
All right.
So we can jump right into it. First one is from Simon. Would you advise outsourcing to the best service providers for PPC, PR, photography, SEO, etc., to achieve best growth rate, as these services costs can be add backs?
So these services cost would not necessarily be added back. If the normal operation of the business include using a third-party advisor or that conduct PPC for you, then this is a kind of it's a replacement for a cost of an employee that could do the same. So these costs can be taken into account. If there are excessive costs, so we had the case where the seller paid so much money to a third party who actually managed the PPC that it was equal to extraction of profit out of the business. So we were able to eliminate this expense. But I wouldn't. I believe that those costs will be taken into account, generally speaking. Of course, it can be measured on a case-by-case basis, but generally these will be taken into account.
That's a good point.
Okay, next question is from Michelle. Does it matter how many products are in the business? Is there a target number of products that you should have?
Yes, this is a very good question. You would obviously it's obvious that if you have multiple SKUs, your business may be complicated. So complication, on one hand, it creates some barrier because not everyone can handle a business which is complicated. So you have a kind of an advantage over some entrance barrier to competitors. But on the other hand, this may frighten some of the buyers. Usually buyers would prefer business which is more focused around some theme of around the brand with decent amount of SKU, but not too high. So I would say around 20, 30, 40 SKUs, or at least not that each SKU will have sufficient profits. So business with many SKUs, each that sells very little, this will not be considered as valuable as the business which is more focused. On the other hand, if you have just one product, one SKU, this may be deemed as a high risk of a business as well.
Yeah, and it might be worth getting rid of some of those loser products.
You are right. Actually, losing products, by the way, this is something that when we adjust the profit calculation, so we would take out losing products, just eliminate them altogether. One more thing that we would do, we would eliminate launching cost of new products.
Yeah.
As we see them, such cost as an investment that was made by the seller in favor of the buyer, actually. So you make this investment and then you just started to earn money over those products, but the real winner here will be the buyer, not the seller. So at least we would not accrue those costs unless this is a business that launch new products all the time. So if launching new product is part of your ongoing business, then these costs may be taken into account. But you are right that you can eliminate losing SKUs, and you may always also eliminate SKUs that are minor contributor. So we had a case where we had a business with 250 SKUs, and we've decided to just disregard major part of them and maintain the 20% that actually created 80% of the business profit. And with that, we were able to get a much higher value to the same business. Just so less was more in this case.
Right.
Okay.
Where's Victor's questions? I saw Victor on. He's got to ask some questions.
Let's see. The next question is, with an exit strategy, should we use cash or accrual accounting?
So you should use an accrual accounting. That means that a cost of goods sold are being accrued according to the unit sold. So cash accounting would mean that, let's say that in January, you paid your supplier for an inventory which is sufficient for 3 months. You paid a certain amount. On a cash accounting, you would accrue this amount paid to your supplier in January. Accrual accounting means that once you sell 1 unit, you will accrue the related cost of goods sold of this 1 unit. All the rest is not an expense. The inventory cost, the inventory that lies on your warehouse, on Amazon warehouse, this is not an expense. This is an asset that you have, and the buyer should pay for it in addition to the business value. The buyer should buy from you the inventory.
I don't think there's any case where you should have, at least with private label selling, where you'd have cash accounting. It should always be accrual, correct?
I think so. Yeah, I agree.
Okay, next question. From Rad, what is the average commission we pay for consultants like your company?
Oh, that's a great question. So by the way, I think that there is a kind of market standard, but still there are differences. So usually the percentage of the commission is going down as the deal size is going up. We at Fortinet are dealing with the deals of $1 million and above. I think that our median deal size in the past 6 months was about $10 to $12 million. And then the percentage of our commission is lower for larger deals. I do want to say that how much you pay for your consultant, of course, is important on one hand. On the other hand, it is more important what is the value that you get out of those services. This should be the main focus when you talk with your consultant.
So is there a sliding scale? Like, does it go from 10 to 15 or?
No, it goes from 10 to 5.
Yeah. And that is, bang on.
I'm sorry?
That's bang on. I mean, that's the average, right? 10% down, depending on the size of the company.
It depends on the size. So if, let's say, a large deal, it can go down to 5%, smaller deal, 10%, and the rest is in between.
And I can tell you from past experience that paying 10% or paying 5%, I would do that all day long, every day, if it like hire a consult, they can get you so much. And there's I can see in the chat there are experienced companies that are people here that have had exits, and I don't know if they've done it with a consultant or not, or a broker, but it's so important. I mean, you could really add an extra zero onto your exit. You know, it's that important.
I agree. So modified Lehman formula, yes. The answer, generally speaking, yes.
Yeah, who said that? Oh, that's
Victor.
It's a kind of what is it? Is a mouse? It's a cat.
I think it's a Furby, or what is it? The Gizmo. You know what it is.
Leave it to
Norm.
Victor.
All right. From Simon, is there an optimal split of on and off Amazon? Are buyers preferring businesses with more sales in certain regions, i.e., US, EU, UK, Japan, Australia?
Yeah, so this depends on the buyers themselves. Here, each buyers come with its own investment criteria. By the way, it is also very important to share your business only with buyers that are looking to buy business that meet the business that like yours. So don't share your business with buyers that are not interested with such kind of businesses, because then you just expose yourself for no reason. There are buyers that are out there looking to buy businesses with most of the sales in the US, in Europe, or whatever. So it is different. The aggregators, most of them are looking to buy businesses with most of the sales on Amazon, and they're happy to have part of the sales also out of Amazon. But there are also other kind of buyers. So there is the right match for everyone.
Okay, and our last question is from Michelle. What would you consider a losing product? If I have some products that do well seasonally, there's profit only during that season. Does that count?
So this doesn't sound like a losing product. It sounds like a seasonal product. If altogether a product shows a profit during the year, if you look at the last 12 months and altogether this product generated profit and not loss, this will not be a losing product. I would look at the product, if you take 12, measure its performance over the last 12 months. It must be profitable altogether. Otherwise, you're just losing money. So either you can improve something and make it a successful product, or give it up. For your own benefit, by the way, not just for the purpose of selling the business.
Okay. I think that is it. Is that right, Kels?
Yeah, that's it. I think I got all the questions.
Perfect. Well, before we get to the Wheel of Kelsey, how do people get a hold of you, Michal?
So we have a website, which is www.fortunet.net. We'll be very happy to be contacted by anyone of the audience today.
Okay, fantastic. Okay, I think it's that time.
Okay, so it is time for the Wheel of Kelsey. For the mugs, there's still lots of time for the mugs. So #mug, that's for Amazon, or anyone in the US and Canada can enter in that.
So what you're saying is nobody wants my mug.
We got three. We got 3 entries.
All right. Okay, so, that's fine.
Yeah. I think we have a lot of international viewers.
Oh yeah, sure. So, yeah. Now you're making me feel better.
All right, so it's time for the Wheel of Kelsey. Here we go.
It's time for the Wheel of Kelsey.
Okay, that is our mug competition, or the mug one.
Okay, who's in there?
So we got Rad, Michelle, and Guru.
All right, so give them all a mug.
All right, we got 3 mugs going. Okay, I'll just close this one out then. All right, and let's see.
You're lucky it didn't have my portrait on it, but...
Okay, and Wheel of Kelsey. Where did it go? Okay, here we go. All right.
There we
for
go.
the consultation. We'll shuffle these names up in
Look
3,
at that, Michal.
2, 1.
Amazing.
Jason.
Jason. Very good.
Okay, so Jason, if you can email me at k@lunchwithnorm.com or just message me on Facebook through Messenger. That's all you need to do, and I'll connect you with Michal and get you your prize, your consultation. So
That's an
congratulations.
awesome prize. Enjoy that one,
Yeah.
Jason. Okay, Michal. Well, thank you for spending time with us today, and love to have you back. There was a lot of information here, so yeah, I mean, I was impressed. So thank you so much for coming on and sharing your time today.
Thank you. I really enjoyed it. Thank you very much.
You're very welcome. Okay, so before we get into just closing off, Kelsey, you're going to be uploading our Patreon page fairly soon, which is happening in June. So just wanted to let everybody know that is coming. It's going to be pretty cool. I think we've got 3 or 4 different levels of packages. Is that correct?
That's right. So our Patreon is basically a paid content that is like a monthly subscription service. So there's 3 or 4 different tiers that you could do. It's not up yet. We're still updating it. So you can start in June, but you can just start checking it out now. But we just wanted to get the conversation going that we're going to be offering some really great things like Ask Me Anythings, norm
Additional
consultations,
trainings, yeah.
additional trainings from basically it's going to be a tight group and basically like small team training, and it's going to be
a
pretty
variety
cool.
of different things. It'll be pretty
Deals.
cool. But
Yeah.
at the end of the day, Lunch with Norm is happening Monday, Wednesday, and Fridays. If you wanted to do this, I was just trying to pay Kelsey something. I want to get him, like, he's working for free for the last 6 months, 8 months. Yeah. But no, you get a little bit. All the soda you can drink.
That's right.
Okay. All right, everybody. So thank you for joining today. We're closing in on the 1,000 member mark on YouTube, and we got about 1,200 people in our membership group. So yeah, please, if you're new to this, if you like what you heard today, please feel, just join the bloody thing. All right, that's it. You have anything to say?
No, that's it. Thank you.
Okay.
I think we can leave on that note.
So Monday, Wednesday, and Friday at noon Eastern Standard Time. And thank you for being part of the community. Thank you. Hey, it's really great to see our regular members on here. But please, if you're new, feel free, join us. It's because of you we can do this. So thanks a lot and have a great day.
Lunch with the